Investing with borrowed money, either through loans or margin, can magnify your returns, but it also elevates risk. Here's an article by 24/7 Wall Street saying, should I take a $50,000 loan for MSTY investment? Basically, this article examines a Reddit user considering a $50,000 personal loan at 10% APR to load up on the YieldMax MSTR option income strategy MSTY, and with MSTY paying roughly $1.47 per month per share, or about 7% yield every month, the question is, does the upside outweigh the downside? Now, there's nothing wrong with margin, and using a little bit of margin can actually help your portfolio, but this guy only has about $10,000 combined between MSTY as well as CONY, but he's considering a $50,000 loan at a 10% annual percentage rate over 5 years to boost his MSTY position. Now, this is some insane leverage considering he only has about a $10,000 portfolio. He's essentially doing a 5x leverage, which is pretty insane. But he's confident that his strategy and ability to cover the payments is going to work out and wants some feedback. So the last distribution from MSTY was $1.47 per share with a $50,000 investment. At a current price of $21 per share, that would yield you about $42,000 annually. Now, you do have to factor in the 10% APR loan, which is going to be about $5,000 in annual interest. Now, this all sounds great, but we also have to factor in the potential NAV erosion, as well as any taxes on these distributions that we're receiving. And the distribution fluctuates monthly, as it was $2.37 per share in May, and it could drop even further for July. But so far in the past year, it's done phenomenal. It's up over 108% in the past year for total returns, which is factoring in all the distributions for MSTY. And if we take a look at the total return for all time since February of 2024, the share price during this time was around $21 per share. So it's essentially at the same price point as it was back in February 2024, but we do have a total return of almost 300% because of the high dividends. And if we look at MSTY's website on the YieldMax site, we can see the current forward distribution rate is estimated to be about 90% based off of that $1.47 distribution that they paid out last month. If we take a look at the share price, it is fairly volatile as there are a lot of ups and downs, and it can very well go down. There is not as much upside potential on the share price because it's a covered call ETF, so the upside is capped. If we take a look at MSTR, it has much higher share appreciation than MSTY. And if we compare the 1-year chart of MS to MSTY, we can see that back in November, it reached an all-time high of $44 per share, and then the market pulled back because MSTY did drop a bit in share price. Then over the past 2 months, it rose from $237 per share all the way to almost $400 per share, and MSTY did not see much gain in share price during that time because of its option strategy overlay. Now, as this article says, jumping in with a $50,000 loan is pretty insane for your portfolio. I honestly wouldn't do more than 25% of your portfolio with a loan or margin, especially at a 10% APR, which is pretty insane because there is downside risk to MSTY, even though we're receiving very high distributions. And if the market somehow tanks or Bitcoin tanks or MSTR doesn't do as well, MSTY will drop significantly in the share price and he will get margin called. But in this case, this is a personal loan, so there won't be any margin calls. But at a 10% APR, you really don't want to mess around with that. If you do want to use leverage, using margin is a better strategy. With Robinhood, you can use margin at a 5.75% rate, which is half of this APR. And there's so many people on the YieldMax ETFs subreddit that are wanting to use margin or leverage or take out as much loans, cash advantages, or home equity line of credits to invest in MSTY because it's done phenomenal over the past year. It's up 108% in the past year because of that high distribution rate. So people think it's an infinite money-making machine, and they're throwing in all of their money that they can to invest in this ETF. But this is a very complex ETF. You have to understand what this ETF is before investing into it. They think it's just letters on a screen paying a very high distribution rate. You invest in it and you make 90% or even more return every single year. This fund does not directly invest in MSTR, which is MicroStrategy, which is essentially a Bitcoin proxy company. And it basically employs a poor man's covered call option strategy all over MS because of its high volatility. When you're selling option contracts, the best stocks to try options on would be the most volatile stocks because you're going to have higher option premiums that you're going to be collecting as option sellers. And that is why MSTY has been so popular lately, because MSTR is a very volatile stock, so we're able to generate a very high distribution rate. Now, because this is a covered call strategy, our potential gains is capped if MSTR shares increase in value significantly. Now, it's not a bad thing if MS skyrockets, but we won't see that return with MSTY. Main thing we don't really want to see is MicroStrategy drop significantly in share price, because that would significantly affect MSTY. So the takeaway is leverage on MSTY is not necessarily a poor idea, but a demand structure restraint as well as diversification, because remember, this is a single stock ETF. So you want to diversify into some other investments as well, and you don't want to over leverage yourself. Start really small and see if it works out. And especially for this investor willing to start small and scale thoughtfully, it could work. Because a lot of people tried using leverage around Christmas and Thanksgiving time when the stock was between $30 and $40 per share and got absolutely burned as the share price continued to drop further and further all the way to the $19 range. And that is the risk associated with this ETF. But right now is a great price point at $21 per share, low 20s, and if you can get this ETF below $20 per share, that is a phenomenal entry point, and you can see some very high returns in the future from those monthly distributions.